Good morning, IT. Today is December 10th, 2012, and I thought I'd finally put up another vid as I've been promising for so long. For those of you who may not know me, I am DREBG, aka Dave, over at informedtrades.com. I'm a senior member at Informed Trades and have been for some years, and think it's one of the absolute best sites on the web. I'm not just saying this to try and get you to drop $9.95 a month. I'm telling you because it's absolutely free in every way. Great traders, tons of information, a great resource. There's so much to do, so much to share. Go over, start a blog for free, share some charts, talk about some things. I don't care what type of trader you are, what type of securities you trade. It's well worth your time and effort to go through, look at IT University, look at all the trading videos that we have. It's really, really a great site. I often get private messages and emails from a lot of new traders asking me about my systems and my advice and things I might suggest that they change or do differently or where to start. And it always brings me back to wanting to do videos of how exactly it is that I go through and start a chart from scratch, doing some sort of technical analysis, because I'm a technician. I don't follow fundamentals much at all. And I think it's just worth my going through the process of exactly what it is that I do so that people can have a better feel for what you really kind of have to do in order to get the results that you want to have. You got to put in the time, you got to put in the effort, but it's well worth it. So today we're going to talk about the franc-yen pair. So I monitor a bunch of forex pairs all the time. I'm just scanning to see if something pops out at me. For me, the first thing I saw was this channel. It seems to make sense. It's in a downtrend. And then if you throw up a couple of MAs, here's a 50, here's a 20. I like to see when those cross because I feel that those give me a good idea of what the trend might be. And as the title would suggest, counter trend, question mark? Well, what is a trend? Is this trend down? Is it up on the daily? Is it down on the 4-hour? We really have to identify what that overall trend is, because let's face it, there's almost always a higher quote-unquote time frame, right? And if we assume that higher time frames are more accurate, well, shouldn't that always lead to that time frame being the major time frame that we should follow the trend? Yes and no. But while you're waiting for those trends to perhaps continue, you may want to consider some sort of counter trend trade. I'll let you guys decide whether you feel this trade that we're going to set up is a trend or counter trend trade, but recognize that there is always a trend going on in a larger time frame that will vary from the shorter time frames. I'm always a big fan of higher time frames, meaning dailies and weeklies, nothing lower than a 4-hour chart for the most part. It just helps me to identify what I'm doing and then give me the time to be able to come back to it and make changes accordingly. Instead of hopping in and out of trades 3 or 4 or 5 times a day on a 5-minute chart, a lot of my trades take weeks and they tend to develop over time, but I also find that they're a lot more accurate, and since they're such long time frames, they have a lot more profitability in them. So the next thing we need to do is draw in some support and resistance lines. Don't get over technical here, guys. Look to see where is price action hitting. It's pretty obvious. Just draw it in. And then there's another one. So that's it on the weeklies. You don't have to go much farther than that. There really isn't a lot of detail you need to put in. But what we do now is we need to drill in. So we're going to drill into a daily to blow up this section right here and find out a little more about what price action's been doing more recently. Here it is. And really, all we do is the exact same thing we just did on the weeklies. What do we see here? Well, we see a trend line. This trend line happens to be up. So is the trend a downtrend? It is on the weeklies. Is it an uptrend? You bet it is on the dailies. Do you see why we need to find those areas of support and resistance where we think we can get in with the overall trend by using some sort of counter trend trade? What else do we see? There's some supply back here. This was back in April. And I think that's going to be a key as far as a reversal point of continuing this trend downward from the weeklies. Also, if we take a look at the fib study, and we fib this entire drop here, we'll find that we're dropping in right around that 78.6, which is inside that supply zone, which is touching this overall channel, which is also touching this up channel. There's a lot of reasons to think that this thing may turn and continue downwards. Now, I'm a big fan of clean charts, so I see no reason to keep the fib study up there if we got the information we needed. So we'll remove it, but I just leave in that 78.6 fib line because that's what was most important. Next, if we put up some monthly and weekly pivot points, I like to have them in there because I think price action really does respect them quite a bit. I'm a big fan of these, and obviously you need to be careful because when I recorded these screenshots, it was on November 30th, so now the pivots have changed. We need to keep that in mind. But see, what we've done is we've added more areas of confluence that we can analyze when we look even deeper into this. That's what we're going to do next by going down to a 4-hour. As you see on the 4-hour chart, everything we've created up until now is there, and we can really see some pretty heavy evidence that maybe there's a confluence of events that are happening that can really lead us to get into a trade on the short side. What do we see here? It's a demand zone where I think price action may be going to at some point below the monthly pivot. We see this demand zone down here between 83 and 84. We're going to do the same thing we did on the higher time frames here, folks. We're going to draw in a fib study. That fib study of that most recent run is going to show us that we have a 382 here, we have a 618 here, and a 78.6 here that just happens to coincide right around this monthly pivot, as well as that 84.60 support level that we had drawn on the higher time frames. So what does this tell me? This tells me that price action is looking to turn around at an area of supply, top of a channel on the weeklies, top of a channel on the dailies. But where would it go if it did reverse? Well, there's a pretty good confluence of events down here between support, resistance, demand, pivot, fib study. If we draw that in, it looks like this box would be a good shot about where we think price action may be wanting to go for the next big thing. Heck, if you want some further confirmation, how about some divergence? Everyone's always asking me, how about divergence? How about divergence? Well, yeah, there's even divergence on this trade. And this is, again, still the 4-hour chart. We have some price action that's going on making on a new higher high, but divergence obviously here is making a lower low, even if it's slight. That can lead into some decision making as far as confluence of events. Again, I drew it in here to see if it was there. It was, and now I'm just going to take it back off. So I'm going to scrunch up this 4-hour chart a little bit more because there's something I want to draw in here that I think is going to be pretty important. This is the same 4-hour chart, but we kind of scrunched it up a little bit, and we see that daily channel we drew in orange. What I wanted to do here is make sure we ran a fib study on that daily up thrust we saw here. Probably should have drawn this in sooner, but I wanted to make sure we at least made note of it. You can see here's that box that we just drew, but look what else is in that box. Another area of confluence here. This is the 382 level of that entire move up, and of course the 618 is here. So if we put those in, but then take them back out, this is what they'll look like. If we just draw in a couple of lines and leave them there, that way it's not so cluttered. Okay, so this 4-hour scrunched up chart is going to look a little better when I bring it back out to the dailies and blow it up a little bit. It's going to look almost the same, but just a little more clear. What I do see here is that area of confluence that we drew here, it's a little sharp as far as the turn is concerned, and I think we need some little bit of room about when we think that might get there. It's probably going to be more like over here. So let's draw that in on the dailies and see how that looks. You'll see how we moved the box over. It used to be to the right of that 382 line, and now it's right in the middle of it, because I think this is just a more acceptable angle at which price action may want to mosey its way back down. Now, the other thing you've seen at the top of this is we put in the stop loss. We'd want to put that above the supply area, above the channels, above the 78.6 fib of the entire move. So it's safe, and that's a good area for us to get into, and it's also great for risk to reward. I always like to peg a shorter term target to see where price action may make another move, if it's going to actually go to that box that we identified here or not. And one place that I can see that may make some sense for some confluence is this spot right here. We have that 382 level. We have the bottom of that up channel on the dailies, that orange channel. So I think if price action gets here, we then need to make a decision whether we think it's going to continue down to our target, or even all the way down to the bottom of the weekly channel. Who knows? But that's a good place for us to start to at least look at what we should be doing. Certainly a great place to move our stop loss down, lock in some profits, and make new determination of where we think price action is going to go, hopefully down to here and maybe even lower. I'm a man of my word. I did this analysis and I put my money where my mouth is. This is a live trade on my personal accounts as well as my fund on Informed Trades. You'll see I just put it in at the very top there. There's the sell order right in the middle of that supply zone. And if we type it in, we'll see that there's a short entry at 89.01 at the exact time that it was entered. Still in this trade. Again, this is December 10th, so we're well into a week or so. And we'll show you where this trade's going to be at now shortly. Before though, let's just pop back down to a 4-hour where we'll monitor this from now on, and we'll see that everything we've created is right here in front of us, and we really don't need any other charts at this point. We can just follow it and know that we've done the analysis we needed to do when we needed to do it. This target zone is the area we identified before. This is the midterm or target 1 target area. Here's all of our confluence and our divergence and everything else that's happening. Our stop loss is above, and of course our entry is here. A lot of things going on, but once it's drawn and it's in there, it's done. You don't have to think about it. The only thing that's going to change, we'll go to the next chart currently, is you'll see these monthly and weekly pivot lines. Those will be updated because obviously we're in a new month now. Not that that makes a huge difference because they're not going to change a lot, but certainly they are going to change a little bit. So as a quick recap, remember we start with the blank charts on the weeklies and we identify those areas that we think are going to have some sort of resistance or support where price action is going to actually make some changes, and we drill down to a new chart and we make the same observations and we identify those areas where price action may have some issues, where it may actually do something different, and we mark those off. Mark off some areas of support and resistance like pivot points. Drill down again into the 4-hour. Identify even more areas like demand, like new fib levels. We mark those fib levels so we have them there for future reference. We mark those areas where we think they're going to have some sort of target, maybe even see if there's any divergence. And as we keep moving along, we refine and we refine and we refine. And what you're left with at the very end, after you're all said and done, is you have a trade that's been entered, and we have a chart that's ready to go that we can reference over time. In this case, a 4-hour chart, you don't even need to look at this more than once or twice a day, every other day, to monitor its progress. It's one of those almost set and forget type of trades because we're really trying to get in with that overall downtrend on the weeklies. And here's what this trade looks like today. A few things you're going to want to note. Obviously, there's some price action that's happened since I recorded this screenshot back on the 30th of November. This is actually a mistake on the other slides that should have said 11, not 12, but regardless, this price action is the difference of what you saw before. Here, I'll click back. No price action there, and there it starts to decline. A few things that really stand out to me. We've had this cross on the 50 and 20 on this 4-hour chart, which is great. It kind of reinforces what we've done. We're on our way down to this target 1. You'll see that this monthly pivot has moved up. Go back. It used to be down here, 84.80, and now it's up around 87. And as I said, that was going to change, but that's okay because that really just, again, reinforces where price action may make another decision. So a few things to note. Risk to reward here, we're in at 89.01. We're about 140 pips back to this stop loss. Down to target 1, it's 1 to 1.3 risk to reward. Down to this second target is about 1 to 3. Down below this 618 is about 1 to 4. And if we take that all the way down to the bottom of the weekly charts, this puts us, again, here's the weekly, this puts us at 1 to 10 if we were to carry this thing the whole way. Now, who knows? Are we going to carry it that long? But the point is, we're in at a very good place at the top of this trend, and I think it's a great trade. We can at least have a little bit on our side by way of seeing where price action is relative to other confluence levels like this 786 fib, the entire move, this channel on the weeklies, this channel on the dailies, this supply area, this demand area, the divergence that we saw right at the top that worked out flawlessly. You could have taken a small trade on this and been out already. Geez, one standard lot, $10 a head at 120 pips, you'd be out with $1,200. I haven't even looked at this since I saved the screenshots over a week ago. I've just been letting it ride, and I'm going to continue to do so. So I'll update the blog as this progresses and let people know. But in the meantime, please feel free, drop me an email. It's drebg@yahoo.com. You can get me over at Informed Trades as well. And let me know what you think, and we'll go from there. I hope all's well, and I hope you have some good trading.